I'm reading something now that sort of explains it in terms of Xi and what he's looking for. So there's three things: national security, which includes greater control of data and technology, and then common prosperity, which we talk about here a lot in this country, which aims to curb inequality in China that has soared in recent years. And then I think which follows on there, stability, which means tamping down discontent among China's middle class. So this all has to do with the CCP staying in power, I think. But I'm just wondering how much they can hurt their economy and whether they're willing to do that based on maintaining control and sort of stamping out some dissent like we know that they do.
Yeah, hopefully you can hear me now, Joe. I'm sorry about the audio. Look, this is absolutely about communist power and trying to stay in control of power, but also they are very serious about trying to tame what they consider to be out of control capitalism to make sure that there's some equity. I don't think that that's possible, but I think that the party's certainly trying. On your question about education, this was largely about trying to make sure that consumers are not gouged by companies in a sector that's so important for Chinese progression. That's education. And remember, Joe, the Chinese want their population to grow. They want people to have more kids, but they can't do that with the cost of education the way that it was. And what may be the next shoe to drop? Housing, Joe. If you look at the prices of housing in China, this is another one of those factors that have Chinese citizens very upset, and parents people not willing to become parents until they do something about these costs. So I think that's another sector that if I were an investor, I would be looking at, because there's certainly risk in the housing sector as well if you're in those stocks.
How about healthcare, Dewardrick?
Absolutely, Joe. Healthcare is another one of those places, less so than housing, but certainly that's a place that I would start to look for some risk if I'm invested in those sectors. Joe, if I can say one thing, I think what's important for us to note, though, is that the Chinese are trying their best to signal that they're not going to stop IPOs coming to the U.S. at all. What they're trying to do is control how these things come to the U.S. In this meeting that happened last week between Fang Xinghai, who is the vice chairman of the Chinese Securities Regulatory Commission, and the big Wall Street banks, was an attempt to sort of calm the waters on that. I'm not sure if it was completely successful, but that was the attempt.
Dewardrick, philosophically, she has a kind of a tough needle to thread, if you will. When you look at the GDP growth in China, their entrepreneurs and some of the sectors of their economy have outcapitalized us in terms of capitalism. They've shown us how it can be done. And when you're getting 8 or 9% GDP growth in better times, that's not going to be generated by the state, by the government. So I just don't see how, on the one hand, that's what puts China on the map, and that's why that they're, an emerging, well, not emerging anymore. They are a superpower, but they're trying to actually be the superpower on the planet. You're not going to be able to do that without capitalism, and it's not going to be state-owned. Well, I guess they have a weird hybrid form of capitalism, but I just find it odd that they're pushing back against the thing that put them on the map, and they're going to kill the goose that's laying the golden eggs, that's allowing them to bring everyone into the middle class.
Well, the Chinese believe that they can develop capitalism with Chinese characteristics, as they say. I think they've done a fairly decent job of that over the last 40 years, but the verdict is out now that the strategic environment has changed and people are not necessarily willing to go to China without understanding all of the risks. So I think this model of Chinese capitalism, capitalism with Chinese characteristics, is certainly out, I think, for a verdict here. Ray Dalio said that this move by the Chinese regulators is not anti-capitalism. He's right. It's not anti-capitalism. It's pro-party. And what the party is saying is you can make as much money as you want as long as you do it within the limits and as long as it happens with party control. So I think we're in for a ride here, Joe, to see if all of these things could happen. And again, we're not sitting still here in this country. We're also, as you noted in the beginning of the segment, trying to find ways to regulate how Chinese come to U.S. capital markets. So this is going to get interesting.
Shepard Smith here. Thanks for watching CNBC on YouTube.